The International Monetary Fund said that global growth is expected to slow further next year, downgrading its forecast. In its latest World Economic Outlook, the multilateral agency highlighted that the global economy continues to face challenges, including inflation, tighter financial conditions, Russia's invasion of Ukraine, and lingering COVID pandemic. IMF's World Economic Outlook. In its latest World Economic Outlook, released on the eve of annual Fund Bank meeting, the IMF maintained the global growth forecast at 3.2% for 2022, but lowered the projection for 2023 to 2.7%, down 20 basis points from its July forecast. In 2021, the World Economic Outlook was 6%, and in 2023, it becomes 2.7, which is half compared to 2021. So according to IMF, world is heading towards a recession. More than a third of global economy will contract in 2023, while the three largest economies, the United States, European Union, and China, will continue to stall. French economist advisor to IMF Pierre-Olivier Gouranchas, the chief economist of IMF, said the risks are accumulating. We are expecting about a third of the global economic to be in technical recession. So what does this technical recession means? The 2 quarters fall of growth rate of any specific country is called technical recession. In short, the worst is yet to come. And for many people, 2023 will feel like a recession, said Pierre-Olivier Gouranchas, the economic counselor and the director of research of IMF, in his foreword to the World Economic Outlook released during the annual meeting of the IMF and the World Bank. India has not remained unimpacted in terms of economic growth when everyone is slowing down, but is doing better and is in a relatively bright spot compared to other countries. Almost every country is slowing. In that context, India is doing better and is relatively bright spot compared to other countries in the region. IMF Director of Asia and Pacific Department Krishna Srivasan told PTI in an interview. IMF has sharply cut India's economic growth estimate for final year 23 to 6.8% from its July estimate of 7.4%, citing the impact of external headwinds and weaker than expected second quarter growth. Headwinds. Financial conditions tightening. To control the inflation of one's economy, the central banks of the countries like RBI are increasing the interest rate. Taking loans are becoming expensive for the central banks, resulting in the financial conditions tightening. Financial conditions tightening is happening all over the world, which means people won't take loans, won't invest, thus decreasing the economy of a country. A war that has led to an increase in food and commodity prices, widening current account deficits. China is slowing down, which is known as the world's manufacturing hub because of its real estate crisis like Evergrande and zero COVID policy. Despite revision, India's growth is projected to be the fastest among different economies. Behind India were China 4.4%, Saudi Arabia 3.7%, and Nigeria 3%. The US is projected to grow at 1%, while Russia, Italy, Germany were forecasted to suffer degrowth. Reasons for the India's fastest growth. IMF has praised the RBI for tightening the monetary policy to curb inflation in the country. Indian government has an ambitious plan for capital expenditure. Srinivasan said the country needed to continue with it because that would give a boost to domestic demand. IMF has praised the government for cutting the excise taxes, which is across the board, but it should be targeted. It praised the Indian government for its policies to attract the foreign investment and suggested it to continue to attract the foreign investment in its market. IMF praised the digitalization of India for building its digital infrastructure, which will help India further economic growth in the long run. Most importantly, India is dependent on its domestic growth.